Eric Mother to Mother.com, August 23rd, 2016. Let's take a look at markets here with about 1.5 hours to go. We are looking at markets that are slightly to the upside. Let's take a look at those charts. Let's begin by taking a look at the NASDAQ weekly, and even for the week here, we are still breaking out successfully here. In fact, we have to go back to 1, 2, 3, 4, 5, 6, 7, about 7 weeks since the market had a down week. So for now, we are still seeing that the breakout on the weekly for the NASDAQ continues, and as long as markets are breaking out, we have to assume the intention is to probe higher levels. Let's take a look at the NASDAQ daily. And right now what we are looking at is, in my estimation here, this is a most recent breakout. This breakout here in the daily led to this nice swing in the markets here. And so we can extend this RSI breakout line. And I believe what's happening here is market is coming back and showing backtest support. So this is support here and support here, and even we can say that's a slight support. And we are looking at the possibility that we might have the RSI on the daily also punch through 69.1. If it does, expect another strong up day. So as long as the markets are holding above that line of support or that breakout line on a short-term basis, as long as the RSI is trading above this level here, we have to assume that the markets are healthy. If we take a look at the Dow weekly, so one thing we can do here just to gauge market strength and intent is just simply take a look at the Dow, and the Dow is doing its best to break out above a recent weekly closing high, as we discussed recently here. The level that we need to be watching here is 18,570.85. Again, this is this weekly closing high right there. Anything above that and the market basically should be telling us it wants to move higher. Now the more the market holds around this level and plays around here, the more it starts pulling back or retreating from this level and start trending lower. That would not be good short term. As you can see right now, the RSI is coming back to challenge the top side of this RSI line, or you can actually look at this from the RSI recent break level. So the RSI has been finding it difficult to move above this range, going back even to this period here. We came close here for the highs there on a weekly basis. So the market is in a strange spot here. It needs to clear this level on a weekly chart to continue urging the bulls to push the market higher. Otherwise, failure to hold above this level suggests that now we are starting to run out of momentum. Now this can also be seen by looking at the S&P 500 on a daily chart. And even though the market here has been making, albeit a little bit of an improvement in terms of daily closing highs here, you can see that the RSI has not really moved any higher. So this eventually creates a little bit of a situation here where the markets might have to respond to this. The more this is confirmed as resistance on this line, the more it's confirmed as resistance, the more prices are going to have to respond by coming down. And we don't know the extent of any movement lower until it happens. Also here, we can see that this recent break in the RSI has been a challenging spot. The last couple of highs in the market here have come with resistance on this level, and every time there's been a pullback. Here we did see a resistance, and we had a slight pullback. And even here, slight pullback, here slight pullback. So we are back in this general area. Those two lines do offer some type of strong resistance. So here we can see it needs to move above this level on the daily, and also needs to move above this top side resistance line if the S&P 500 is to see higher prices. If you take a look at the hourly for the S&P 500, and again I'm using the charts to your left under the menu tree, and here we can see that we still remain in this wedge I talked about this past weekend. In my estimation, this continues to be the wedge. A little bit of a sideways market here, and also right now at the highs of the day we did come and hit the top side of this RSI resistance line, and there's a bottom side support here. So all this is playing out. This wedge formation, in my opinion, eventually does determine short term where we go. For now, you can see we are stuck in a little bit of a narrowing range. At some point we are either going to break out to improve the price high levels there, or break down to start the next swing trade. So again, if you go to the hourly here, you see that we've come back over the last couple of trading hours to this top side, and we are still showing resistance here. As long as there's resistance short term, the market continues to be sideways, or maybe even with a slight pullback. If you take a look at the 30-minute for the SPX, S&P 500, you see that there's a top side resistance level here. So markets are doing their best to touch new highs, but the RSI keeps making lower highs, and that type of negative divergence generally sets the stage for a pullback. So we just have to keep that in the back of our minds. But the key, and it's important to note this, as long as the market is breaking out here, we haven't seen the market turn down for the month, we still have to be expecting the market to be stable at worst. Yes, pullbacks can take place hour to hour, day to day, but as long as the markets are still positive for the month, this monthly chart looks okay, as you can see with a nice breakout here on the monthly chart. If we take a look at crude oil, as we discussed on Sunday, we can see here already down about 2% for the week. The issue here is whether it can hold above 50. Failure to hold above 50 and drifting below 50 on its weekly RSI might suggest a bigger drop by the end of the week. So this is something we can watch here to see whether it can hold current levels. Keep in mind, this goes back on the 2-year weekly chart to this recent break. This recent break is being tested. So just do it right. This recent break is being tested. Right now you can see we hit that level. We seem to be pulling back. In fact, if you take a look at a longer picture, 5-year weekly now, what you see is we are still coming back to test this break. Of course, that break was the break that brought the market off the highs of 2014, and we can draw a line from here, and you can see we've hit this once before for the highs here, and again coming back this week and hitting that level. So on a week-to-week basis, as long as this is being confirmed as resistance, eventually it seems like we might have to make some type of a bigger drop lower. So as long as resistance is being confirmed here on a week-to-week basis, this market continues to be under pressure, in my opinion. Now I want to take a look at the GLD from a long-term perspective before I go to some recent charts here. Let's go to a long-term chart view, and here we have all data for the GLD. Again, as I've been discussing for quite a while, the issue I have with this chart is we are coming back to test this break level that has been a problem since late 2011, early 2012, and it is this level here. Right, you can see that it was uniform activity rejection here for the highs there, coming back and doing the same thing. So as long as the monthly chart is breaking down below this red line here on the RSI, the metals, in my opinion, still remain suspect for lower prices. So that's it. I want to start with the long-term view so you can see what I'm talking about here, because if you take a look at the GDX, already we are seeing that it is also doing the same thing, coming back to test the break of late 2010, early 2011. So this is the issue right now. We've hit this level here for resistance for the highs there. We hit that level again for the highs there, coming back and doing the same thing in the current market. So as long as this is confirmed as resistance, one can continue expecting month to month a bigger drop, because that resistance is legit. Take a look at silver, SLV, on a long-term monthly chart, all data, and also it is already responding to this break. This break, of course, we know was the reason why it came off the highs here, and so we are coming back to test that level. As you can see, it's being confirmed as resistance. So month to month, this sector of the market that has a lot of work to do. Otherwise, one can actually even say, if you use these monthly charts, that we are already seeing a major sell signal as far as the metals are concerned. So here the problem is that the monthly charts don't look great for now. Having said that, it's always good to look at the potential for the exact opposite to happen, and we have to go to the, let's go to the monthly here for the GLD. What I want to do here is just share with you this price here, which is the recent monthly closing high, and this recent monthly closing high for the GLD so happens to be at 130.56 actually 130.50. So now the reason why I want to share this is we might want to use this as an alert point, because if the market, after 1 month of rest, let's say in the next month, if the market breaks out in September, that's going to be a legit and strong breakout. And keep in mind, in other words, what that would be suggesting is that the RSI resistance levels I'm talking about, so the resistance level is somewhere here going back to 2010, 2011. You can see that if the market can break out in price, then this also suggests that the RSI is also going to be breaking out. So just keep this in view here, because anything above 130.50 suggests that this is breaking out on a monthly chart, and if it's breaking out, it might be best to actually play the upside in gold and miners. For the GDX, the level to watch here is for a potential month-to-month breakout above the recent monthly closing high for the GDX. That level so happens to be at 30.59. So set an alert, because if the GDX is breaking out above 30.59, that means that one can be long this name, this sector of the market, and that will be consistent with our resistance lines on a monthly basis that we just discussed. That will be consistent that if a price is breaking out, RSI might also be breaking out above the resistance levels. Otherwise, if we don't see any breakouts on the monthly, then we have to ignore this sector, or we have to ignore going long. In fact, without a breakout on the monthly charts, maybe this is an area of the market that one can consider a sell or a short. If you take a look at silver, same type analysis here. I'm just going to share with you the potential buy point on a breakout level. Here we can see silver is down, relatively speaking, a little bit much more than the GDX and the GLD. It needs to break out on a monthly chart above the recent monthly closing high of 19.35. Otherwise, ignore. Now, if we take a look at Brazil EWZ, and we can see that one of the reasons why I just want to continue looking at this sector is we are still holding above 50. As you can see, the market continues to respond nicely above 50 for recent lows. All these have been successful, and here we are holding slightly above 50. So yes, it could pull back, but day to day, until we see a break, we have to respect the potential for upside. Here we can also see that on the hourly. If you take a look at this formation on the RSI, right now we got bottom side support here coming in play for now. So not broken. It becomes broken when at some point, if and when it cracks below that red line. So that's one layer of support that's helping it stay together here with its upward trend. And also we can see that you can draw a line either from this RSI movement, which is this movement in price. We haven't been back to those levels since then, so that becomes an area to watch. As you can see, right now the market is responding to that level, having come back to test that that green line here. In fact, you can even go backwards to back test that, and you can see here uniform activity support, double bottom support for the lows there, and then also here on hindsight a nice entry. So pretty much what I'm saying is, as long as the hourlies look decent and the dailies look decent, we can continue looking at Brazil for potential breakouts. VALE comes in mind, one that I mentioned this past weekend, meets the minimum requirement in terms of the monthly setup with the RSI and MACDs trading at, if not at, above 3-year highs. So here RSI at 3-year highs, MACDs at 3-year highs, and that's why it's on our watch list. Again, here it needs to move above the recent weekly closing high of 6.02. So here the best thing to do is wait for it to move above 6.02 on its weekly chart, which happens to be this recent weekly closing high right there. You'd need a breakout above that price range to confirm upside moment. Again, 6.02 is your trigger point. The other stock here is NTDOY, and that's for Nintendo. What we're going to do here is use the monthly chart. Why? Because if you take a look at the technicals, right now we are pushing at the secondary MACD close to 3-year highs. Not ideal. Main MACD very close to 3-year highs. I'll take that, just close enough. And here we can see that it's already broken out, so this is a little bit of a way to see whether it gets a pullback. And the level here that on hindsight was the ideal entry point was 25.62. So it needs to hold above 25.62, and also needs the RSI to move above 69.1 and stay above that. Right now it's above 69.1. We have to give that the benefit of a doubt as a stock that has already broken out. Maybe we can pull back slightly, maybe a couple percentage points, so it can be within 5% of 25.62. So ideally you'd want to buy above about 5% window here after the breakout as a logical area to enter without chasing the stock. So it's still a breakout at current levels. For this to be a true winner, RSI needs to stay above 69.1. The other one is the Russian ETF RSX. RSX here was a recent pick, and it's still breaking out. We had previously used this breakout level here just under 18 as an entry point. Right now I want to use this 2015 monthly closing high as the next buy point. So right now you might want to wait before you consider adding or having a fresh representation with the RSX. It needs to be holding above 19.02 for one to consider this a fresh breakout. So take a look at RSX. If you're wanting to add, wait for it to move above 19.02. If you're looking for a fresh buy, wait for this stock or this ETF to move above 19.02, which happens to be 2015's monthly closing high. And if you take a look at the technicals, we see that the MACDs and the RSIs are already breaking out to 3-year highs, if not just about to move to 3-year highs on the monthly RSI. And we can see that the MACDs are already trading, or at least one of the MACDs is already trading at 3-year highs, which meets our minimum requirement. So those are the ideas I have for you for now. We'll see how things go, but just make sure you have some representation in case the market continues being stable. Remember, the market doesn't have to be on a full-fledged flight to the upside. Even a stable market can yield good individual stock performance. Eric Muathe, Muathe.com. Of course, I'll keep you guys posted. Good luck, peace, and blessings. I am